Afternoon all, how we doing? How is everybody? Afternoon Kennelly, Danny, Monkey, Mark. Can't get my chair in the right position. Julio, BWG. Afternoon, David, Gregors, how we doing, EMAC? So, we've had the news. Afternoon, Alistair. They didn't change the rates. We're still 5.25, but there was an extra vote to increase the rates. So ever so slightly bullish, and the fact that a third of the members want to increase rates, 2/3 decided not to, which is more than last time. So these numbers here basically are voted for an increase, voted for a decrease, voted to stay the same. So last time we had 2 voting for an increase. This time we've got 3 voting for an increase. So it's getting more towards the want an increase type situation. So there's lots of stuff from Bailey, obviously, come out this afternoon in the press conference. Nothing really, I would say, that is really giving any clues or indication as to forward guidance. It's the same as the Fed. It's the same as everybody. Everybody's saying the same thing, basically. We kind of need... Oh, damn, I was just about to get another oil on. It's gone already. Lovely double bottom on oil, by the way. Off of yesterday's low. I was just going to buy that up. It's already gone. Yeah, so basically very much along the same sorts of lines as the Fed. Inflation is stubborn. It's not coming down as fast as we want it to. It's slowing. We can't really do much with this because it's really high and it's affecting unemployment. Same as everybody saying we're stuck. We just everybody, all the banks and countries at the moment are fingers crossed. I just really hope this comes down, basically, is what they're saying. We don't want to do this anymore because it's going to hurt everybody. So let's hope. What else can you do? So yeah, no guidance bullish, no guidance bearish. So the pound has had a mixed move, as you can see from the ADR dashboard. There's been more movement on the US dollar today, really, than there has on anything else. Everything's moved a little bit, but nothing dramatic from the pound. So that was the big move on the news. It's not going anywhere. So no idea, long or short. Pound Swiss, by the way, I moved that one to break even this morning. I said, posted it in the Telegram group, and I said in this morning's live room. So I stopped out on that one. Not bothered. I'd rather be flat, to be honest. But I have got pound odd on, because that was an H1M5 mean reversion this morning. So I'm in that long. I'd rather be long than short on the pound, just because I think they're going to want to undo that move. So we'll see. I've got a sniff. Afternoon, Burke, John, Alex, Virginia, Dion, James, Ian. It's been one of those mornings, just been waiting for something to happen and then nothing happens. So boring. The markets on the plus side now do see that there will be a 25 basis point cut in August 2024. So somebody with their magic ball is looking nearly a year into the future and going, they're going to cut interest rates by 0.25%. That's useful. That's like saying at some point in the next 12 months, somewhere on the planet, there will be snow. We know that. It's not really helpful, is it? So DAX this morning, we had a lovely break. Very quick, clean and easy. Pre-market level broke. It didn't stop. So I took off. I got out, just got stopped out on that pullback before it rallied up to 5R. So the 5R target got hit today. I took the 5R target on my other account and I only took 2.5R or roughly something like that on this one. But yeah, you couldn't have helped not made money this morning on the DAX. So fingers crossed we get something similar on the US indices. We've had quite a big move on the US indices. It's not massive, but it's big-ish this morning. So you can see the Globex session. Quite a big distance put in today. We had a lot of stock earnings. So we've done 249 points on a 420. So roughly 3/4 of an ADR of movement we've had pre-market. So you can see the ADR high isn't far away on any of these at the moment. So we'll see where we go at the open. The news today, we've had unemployment claims come out as negative for the US. The US is coming down fairly hard, especially against the yen, which is good. But there's no other news this afternoon. So that's it for today. Tomorrow is obviously non-farm payroll day. So we'll see where we go. We've got 4 minutes to the open. So just quickly looking at the indices. The Dow, another big day up. Well, not big, but another day up yesterday. So 3 up days on the trot. We're in the middle of the fourth at the moment. We're coming into that propulsion gap, hitting this accumulation. So we probably find some resistance around about ADR if we can get there today. Downside, yesterday's low is over 150 ADR away. So we're not going to get down there today unless something dramatic happens. So I'd be looking really back into that propulsion gap for support for another long today on that. Upside, you've got loads of room up to ADR. S&P is pretty much the same thing. ADR, propulsion. Yeah, somewhere up there. Downside, somewhere pre-market in that propulsion gap. And the same in the NASDAQ, really. So downside, we'd just be looking for a pullback, basically, and then potential rally up. We've already hit the propulsion gap, as you can see, and filled that. So on the NASDAQ, so a little bit more room to the upside on that one up to ADR. But ADR is your upside target across the board today, really. Oil, annoying. So annoyed about that. I got these 2 positions on, and I saw this come down just before the live room. I was watching this down here, and I was like, do you know what? I'm going to get out on this if it pushes down another 1/4 of an ADR. So I might just take a nice big position here and hope we get a double bottom. And then I can stop out on the whole thing down there. It would cost me about another 0.5% risk. Look at it. Literally, within me getting the live room started up, this thing's done exactly what I wanted it to do off of that low. That's where I was going to get in. Yesterday's low. I was like, oh, this looks like it might pop from here. Missed it. Never mind. Right. So let's get ready for the open. So banked 1.5% on this account this morning. Up 12.9% on the week. Not bad, eh? Right. NASDAQ's selling off at the open. S&P's kind of going sideways, and the Dow's going sideways as well. We've got 30 seconds to go. Why is the pound falling against the New Zealand dollar? Just because of the pound news, really, I think, and a little bit more strength on the New Zealand dollar. I have a couple of questions after the open. Okay. Morning, afternoon, John, Brian, Amy. David, you just said, I've got a couple of questions after the open, and then you've asked a question before the open. Afternoon outro. Okay, market's open. No trades pre-market anywhere. So I'm taking the post-market. Oh, there's a lot of volatility coming in as well. So all ranges today too small. All below minimum range. So minimum range is 10% of ADR. So all pre-market range is too small today. So I'm going to wait for the 5-minute initial cash balance to go in and trade the 5-minute ranges today, which makes my life nice and easy because that moved pretty damn quick. Passed the first stage on the evaluation this morning, by the way, for those that weren't in the live room this morning. So 4 days, stage 1 done. Stage 2 just about to start. Only got to do 2.5 grand on stage 2, so I could probably hit that this afternoon. If all 3 of these 5-minute cash balances break really nice and hard down to 2R, that's pretty much target done. So that's not going to happen, is it? This is the real world. Afternoon, Evans. So as I'm not trading the open, might as well answer that question quickly. On the market reversal alerts EA H1M5 strategy, do you have the ignore RSI filter after first trade filter on? Yes, you have to. Otherwise, it won't take additional trades. If the EA is active, we are still allowed to move TP around. Yep. So if you set a hard TP, you can move the TP around. That's not a problem. It only places the TP when it first places the order. If you're using a hard TP, that is. Mark, TP hit on live gold call this morning. Good job. Mark sent me a new strategy to try out. So I'm going to build a quick EA to do some testing on it. I quite like the idea of it, only because it's the opposite to the London breakout strategy. And I know the London breakout strategy doesn't work because I've tested every connotation of that with many, many thousands of system parameter permutations, and I can't find one that works. So I'm quite interested in one that does the opposite to it. I haven't come across one, so I'll have a look. It's always worth a test. So if you did take a pre-market range today, you are either hedged or stopped out. On the Dow, on the S&P, it's a nice clean break, and the NASDAQ, you are hedged or stopped out. This is why we don't trade small opening ranges, because most of the time statistics show you will get a volatile move which will hedge you or stop you out on one direction. Which is kind of proving the point today. S&P, however, worked like a charm. What's the rules of the opposite London strategy? So basically, don't take a breakout. Do the opposite. So this is, look at this, oil. Happy with that. But anyway, yeah, so basically, it's the same as, so the London breakout strategy would be a break of that high and that low today on gold. Yeah, so you would take a break here. And you wouldn't have hit target probably. And then it collapses back down again to the midline, which is where you take your profit. So literally, as soon as it breaks out, you short it, don't long it, and take profit there. So it's a bit like a Bollinger Band mean reversion strategy. Yeah, Bollinger Band mean reversion. That's a really bad mean, isn't it? Draw it properly. Oh my God, I can't draw a line. There you go. So, you break out the Bollinger Band, you trade it back into the mean. If you're going to get a market structure trend forming, that's what's going to happen. So you short it there, you short it there, and you short it there. Back into there. So it's basically the same thing. You just short every breakout. Because most of the time you will get a pullback to the mean. But no stop loss used. So there needs to be an exit criteria. And I'm going to use something similar to the stock index Hedge EA, where we close at end of session. Big break this morning. But anyway, it's woolly. It's woolly, basically. We haven't quite got a set of rules. It's something to test. Okay, so taking the 5-minute ORB on the S&P and the NASDAQ. The Dow, that is too big. So we've gone from a range being too small to a range being too big. So no trades on the Dow this afternoon. S&P and NASDAQ are in play. So we see where we go. Very big, strong break, though. If you took the 5-minute there, or the 15, you would have been stopped out on your short, flipped long, and got a 2R. So that would have been a nice win today. And obviously that one was just went straight away, didn't it? So that would have been a nice win as well if you'd have taken the pre-market. Okay, long S&P. Oh, crap. I just had that annoying message come up when you've got a new account that you log into and it goes, are you sure you want to take this trade? Yep, that's why I press the button. Okay, long S&P. Pushing up on the NASDAQ as well. Afternoon, Evans. Said that already, haven't I? What are the rules? Oh, yes, I've answered that question already. I'm catching up with the chat. I'm already caught up with the chat. I'm just repeating myself. I'm getting old. No more on my Forex funds? Not at the moment. They're fighting. So, yeah, the update on my Forex funds is they're fighting it, basically saying the CFTC should not be involved because the CFTC are to do with the Commodities Futures and Trading Commission, to do with companies that trade and brokerages. And basically what they're saying is we're not a brokerage. We are taking money from people and giving them demo accounts, and then we're paying them out if they do well. They're not taking trades on your behalf. So my Forex funds are basically disputing that. But the problem wasn't necessarily with that. The problem was that the guy that owns my Forex funds also owns the brokerage that operates the charts. So therefore, if you're in a trade, he can manipulate the price to stop you out and do whatever he wants with your account. So he can blow your account. That's the problem. If you've got a prop firm who use a third-party brokerage and they have no influence over price, it's a fair playing field. If you've got a prop firm who manipulate the price, they can basically do what they like with your account, can't they? That's the problem. So his argument is CFTC can't come after me, which is legitimate. The Fed, on the other hand, can, because if you're manipulating price and basically ripping people off by blowing their accounts for them, that's probably fraud, isn't it? So there's two sides to the coin. There's two arguments against them. Long on the NASDAQ. So, yeah, we'll see. But that news was, I posted it in the Telegram group. Oh, I didn't actually. John did. Posted it in the Telegram group. You want to go and read it? There. On financemagnates.com. Market pushing nicely again this afternoon. Dow's out the highs as well. So NASDAQ, we've got the pre-market high to get through as our first resistance. S&P has no resistance, neither has the Dow. So we'll see what happens when we get there, see if we get some pressure. Afternoon, Dio. Okay, NASDAQ pre-market high, a big order came in there. See if they see if the sellers are able to take back control from that high. I've got to keep an eye on this account because my target's only $2,500. So I might take some profits a little bit quicker on this other account. I've already got $500. It's 20% of the target running open at the moment. But there's plenty of other prop firms out there to choose from. That obviously, the ones that have control of their own brokerage are the ones you want to be a bit careful of. Saying that, I've just jumped into bed with Alpha Capital, who have their own brokerage. ACG Markets is owned by Alpha Capital, the prop firm. So I've jumped from my Forex funds into bed with somebody doing exactly the same business model. Probably not a good idea. But anyway, I don't care. As long as they pay out, I haven't got a problem. Do what they like. They can't catch me basically with spreads because I don't use stop losses. So good luck trying to manipulate price to get me stopped out. I ain't got any. So it doesn't really affect me. I was thinking about doing a challenge with FTMO. Yeah, I mean, FTMO, nothing wrong with FTMO. I've traded with FTMO. Got good rules, good company. But they're the same as the rest. They can't prove that they're taking trades on your behalf, and they don't say they do. You know, it's all the same. The business model is get X million a month from people paying evaluation fees. Anybody that's lucky enough to get through 3 stages of evaluation and survive long enough to get paid, i.e. stage 1, stage 2, get the funded account and trade it up to a point where you can do a withdrawal that's worth doing. Anybody that's lucky enough to get through there, use all that pot of cash you just got from people paying evaluations to give them a little bit of a percentage of it. That's the business model. They're not looking for successful traders. They're looking for people that are desperate to try and get money. That's the model. It always has been. We know that. We've always known that. That's why the rules are the way the rules are, because it's all geared up so that you will fail, because there isn't a strategy that works long-term enough. I know people say they do. There's somebody in the Telegram group that says he's funded with lots of money. Prove it. I've been in this game an awful long time. I know a lot of people. With funded accounts. I don't know anybody that's got a funded account that's been lasted for more than 4-6 weeks, me included. I blow all my funded accounts. Why? Because my strategy fails. It always does. It always will. Every strategy will. Everybody that makes money in this industry has a downturn, has a loss. Just part of the game. I don't know anybody that holds accounts for any period of time. Shit, that was a big order. I'm open to people that have got strategies that can last long in prop, but the statistics show that there's, less than 0.5% of people hold an account for more than 6 weeks. Yeah. So if 100 people do a prop evaluation and get funded, less than one of those 100 people will still be in the game in 6 weeks' time. That's the statistics published by the prop firms themselves. So, if you're lucky enough to be that one person, good job. Well done. I'm just a little skeptical, obviously. We're pulling back quite hard at the moment. The Dow has completely done a 3-bar reversal and turned tail and run the other way. S&P is doing the same. NASDAQ's holding up at the moment, so I'm giving the benefit of the doubt to these guys at the minute, but not looking like the buyers are very much in control at the moment, so just getting ready to hedge on that account. Doesn't look like this is going up, does it? Look at the size of that Dow move. Right, so we'll see if we hold here. If we break to the downside here, I suspect we're going the opposite direction, but we'll see what happens. Oof, that's a big order coming in as well. I've been liking funding pips. I use Blackball. Don't know Blackball. I've never traded with Blackball. They've got decent connection, decent execution, decent spread. They're all, anyone, doesn't matter who you use. It's all about the execution and the spread and whether or not they're a legit broker at the end of the day. The trouble is most of these white label prop firms out there are using 8cap, because 8cap provides the architecture for prop. So, and they're not a very good broker. Not good execution at all, and not good spread. So a lot of the prop firms out there are just not very good trading conditions. And NASDAQ's dropping quite hard. Hedging that one in a sec. Not a clean break today. A lot of different movement today. Look, S&P's holding up 50% of that move. NASDAQ's undone the entire move. The Dow's actually put in a new low. So we've got very different movement across all indices today. We've got a lot of stock earnings came out yesterday, after market, and we've had a lot of pre-market today. So there's a lot of different stocks with earnings at the minute. So obviously, again, it's just getting a lot of volatility at the moment. Hedged on the NASDAQ. Assume that took 2 sells. No, that's only one. So hedged on the NAS. Still long the S&P. Afternoon is met. Probably has always been doing. So obvious to me. Why would anyone give millions away to strangers to trade? Yeah. Well, anybody with a decent amount of money that wants to invest their money will need a vehicle to do that. And if you have somebody with a proven track record, then yes, you will. But you'd use someone like Darwinex, yeah. You'd use Darwinex to do it, yeah, because you've got funds in here producing long-term results with long-term track records. So you would use a certain investment vehicle. Like you wouldn't go, oh, that bloke's just passed an evaluation. He's just done 8% in the last week, and yeah, the last 2 days he's just done another 5%. I tell you what, I'll give him £1 million. No one's going to do that, are they? It's obvious. It's obvious to me. It's obvious to most people, I think. It's a scam. Well, it's not a scam. It's a scam. It's only a scam. Well, it's only a scam if you lose to it, isn't it? Yeah. If you find a way to scam the scammers, i.e., if you find a way to make money out of prop, it's not a scam, is it? You're gaming them as much as they're gaming you, aren't you? What target would I choose on the Dow downside? I'll have a look in a sec. So I just got to concentrate on the S&P because I need to hedge this S&P trade. If it breaks down, but it's not at the moment. Let me just want to stick tick strike on. For some reason, tick strike doesn't always work first time. I'm just going to refresh it. There we go. So not a lot of movement. Just got hedged on that one to the downside there. A lot of buyers coming in. You can hear, and S&P's trying to tick up. So we'll see if this holds. If not, we'll need to hedge that as well. See where we go from there. We'll have a look at them all in a sec. I want to see what this is going to do. Ever looked at trading the inside of the opening range? Trading the inside of the opening range? Like trading from OIB high to low? You could do. Yeah, I mean, there's a million ways to make money in volatility. So yeah, I mean, there probably is a way to do that. I haven't looked into it though. No. Rather than trading a break. Well, you haven't really got a lot of room, have you? So basically, your maximum, you're limiting your profitability to that. So it's not a great strategy, is it? Because that is your that's your maximum you can make if you're trading from range high to range low on the open. That's all you can do. And let's face it, it's not often we get hedged like that, is it? That's quite a rarity to be just ticked in like that. If this flies to the upside, then that has cost me $1,000, whereas that one will make 2K, which will pay for that. But it's not often you just trade. It's I don't know. I never tested it. I don't know how you would do it. Where would you put a stop loss, and how would you get out of the trade? You need to formulate a strategy for it. But the nice thing about breakouts is they have, like with DAX this morning, you have unlimited upside, don't you? I mean, this thing has run 5, probably 6, maybe 7R today. So nice big move to the upside. What leverage do I use? 300. Well, it depends. Position trading, use 500. These accounts are 300. Come on, make your mind up. So I want to get on and do FX stuff. Either go or don't. Make your mind up. Stop sitting here. I don't want to sit here for an hour watching candlesticks go like that. Equally, I'm just going to put some pending orders in the market. I don't have to focus on it then. So I'm just putting a hedge in place, basically. Not going anywhere at the moment, so we'll have a look at that in a minute. I use the same broker, Robo Forex Prime. My look back period is 6 candles, and I got entries on the NAS US and the S&P. Don't know. I'm using 0.1, 0.2, and 6. Those are the figures I got. I don't make the figures. This is all calculated from data supplied by my broker. If you've got the same broker as me and you've got different data, speak to the broker. I don't know. I can't control your data. Maybe you haven't got much data loaded. Have you got 10 days worth of data loaded? Check that. This works on ADR 10. If you haven't got 10 days worth of ADR, it's not going to give you the same number. So make sure you got 10 days worth of data loaded. That's the only reason you would get a different number to me. My Prime account is not giving me the same numbers though. My Prime account, the S&P today is 631 ADR. Oh no, it is the same. Sorry, yeah. Forget that. 2819. 2819. 4208. Yeah, no, I have got the same data on both my accounts. Forget that. I'm lying. Interested in your comment on 8cap. I have a MT5 account with them and I've found them to be okay, but my fills with IG are more consistent in terms of spread and slippage. They might have changed. I every time I mention the word 8cap in here or in Telegram, everybody goes, oh, they're awful. And that's my experience with them, but they may have changed. I don't know. They may have had to change because there's so many prop firms out there and people moaning. If you're trying to scalp on a broker that gives you an execution time of 5 seconds, that candlestick is gone by the time I've placed my order. You can't have that. So maybe they've had to change the way they work because that's what it used to be. You used to be able to press the button, sit there and count to 5 before your order would appear on the chart. It's just not possible to trade with it. Fine if you're trading hourly charts, 15-minute charts maybe. Anything higher than that, if you're scalping M5 time frame or anything lower than M5, if you're scalping M1 charts, you can't have a 3 to 5 second execution time. Market's gone by the time you've pressed the button. It's just pointless. So I don't know. Isn't the prime account up to 100? Yeah, 300 is my leverage. 500 on ECN, 300 on prime. Okay, we can hear nothing but sellers. Buyers. I haven't heard a sell order come in all morning. We're not making any all session. We're not making a lot of progress. So you can hear they're constantly buying up, but we're not getting anywhere. So it seems to me that they're absorbing all the buy orders today, which means the market feels pretty heavy. So if we don't get this break in the next 5 or 10 minutes, I think we're probably going to break down. Because the buyers are trying really hard, as you can hear, but they're not getting anywhere. So might be a hedge day today. Because there is no progress being made. So if that is going to be the case, your options are right now, shut your longs. And if the break happens short, you've only got to get down to there to get break evens. The risk you run is obviously we do finally get that break, in which case now all your shorts are just going into drawdown and you're not making any profit on the longs. So I would wait if you are hedged, that is. The S&P is trying very hard, but you can hear it literally for the last 15 minutes. There's nothing but ticks coming in. Buy. We haven't even broke out of that inside bar yet. So you can hear there's just no willingness to go long today. But we'll see. Not a lot of willingness to go short either, is there? So we'll come back to this in a minute, I think. So for position trading, I will need an ECN. No, you can use prime account for position trading. You don't, as long as you've got over 200 to 1 leverage, ideally 300 to 1 leverage or higher, you'll be fine. Position trading. It's just about margin. You need as much margin as you can get so that you can get the positions on. That's really all it's about. So ADRs today, here come the sellers. Okay, so we've been buying for 15 minutes. We haven't got anywhere. Now the sellers are coming in. So we'll see if we get a sustained rally on the sell side. If we do, I suspect this is just going to collapse. I'm just going to move my sell orders up on the S&P just to reduce the hedge size. So I think this is a short today. Here come the sellers. Not sustained anything, is there? You can see by the size of the candlesticks. No one's interested, are they, today? Which I'm surprised about, seeing as the amount of aftermarket and pre-market earnings we've had. This is the busiest 2 days of the fortnight. We've got no liquidity. Something's gone wrong somewhere, hasn't it? Nobody around. We've got alerts going off over here. US dollar CAD hourly. We'll have a look at that in a sec. No volume. Here we go. Buyers coming in. Factory orders just come in 2.8 off of 2.3. It's bullish US. Moderna stocks falling. Plantier shares popping. This is just real mixed results, isn't there, today on the earnings? So I just want to see if this S&P is going to break, because if this S&P breaks up to target, I can close this. Just Just can't get, just it's like a car backfiring, isn't it, today? It just literally can't seem to get started at all. Every little rally we get is just getting battered. Just feels like it wants to just go. I'm just tempted to get out of the longs. It just feels like it wants to go short, doesn't it? I don't know. It's not really giving me any clues, is it? Look. So at the moment, we're basically making higher lows and higher highs. But we haven't gone anywhere. There's absolutely no reason to do anything at the minute. Go long, go short, go nothing. It's just nothing. But that is telling me we are very heavily weighted short at the moment. That's just got no idea. What a mess. Well, there's no point sitting there looking at this, is there? Let's do something else. Boring. Right. ADRs. Euro Swiss. ADR hit to the upside today. So that one, we got a nice reverse alert and retest at ADR. So there's your ADR hit. There's your reverse alert. There's your retest. There's your M pattern. There's yesterday's high. There's the previous day's high. Resistance. Beautiful short. So nice looking short on Euro Swiss. There's your previous day's high, yesterday's high. There's your double top, double bottomed off of yesterday's low. So that's just kind of stuck at the moment in a range, pretty much like everything else seems to be at the minute. Really tempted to take a long on the Dow now. It just looks long. Who knows? If I look at it anymore, it's just going to drive me nuts. So I'm not going to look at it. Euro pound. ADR hits the upside, 125 ADR. Obviously, we've had the pound news today with the interest rates. No real reaction to the market. Market not really sure what to do with that information today. So every chance that this could reverse off of 125 ADR. So good potential. Gap fill short there. We are in a range. You're up towards the high of the range. If it doesn't go from there and it pushes up, it will probably go from there. So could take first short there, second short up there if needed. Euro, US dollar, very much the same thing. We're pushing up into highs. So this propulsion move that started that sell, they added into that. Looks like they're adding again. 125 ADR, 5-minute reversal alert. Just gone in on that one. So that looks good for shorts as well. US dollars rallying ever so slightly. You hear it's dead silent. There's no orders coming in. Something's going to happen. Something's going to move in a minute. This is eerily quiet. Literally, there's no volume. It's as if we're waiting for some big order to come in from some bank somewhere. So Euro US dollar, that's an ADR hit to the upside, obviously. So nice M pattern reversal gaining there. Pound New Zealand came down quite hard. Nice reversal straight off of ADR there. There's your W. New Zealand dollar CAD, again, another nice reversal at ADR. We had the initial reversal there this morning. And then we just tapped up and invalidated that high. So the second reversal alert's just gone in there. So that was your initial entry at ADR. So you've actually got a better entry. You will have hit target on that by now. That's that initial entry there is that candle. So you're looking at somewhere around about 28 pips to the downside. You've had 33, so you've had more than half an ADR drop out of that already. New Zealand US. That's sitting up at ADR at the moment. Weird. Really weird. Something's going on. That's just come off of 125 ADR. You had your initial reversal alert at ADR there this morning. So that was your first entry. Then we pushed up, invalidated that high. That candle would have given you a second entry. So basically, that M pattern there, the entry was here. Here come the sellers. And it's just invalidated that high again. Here comes a lot of sellers. Just waiting to see if they carry on. So I've moved the hedge. In fact, I'm going to do it here as well. I've moved the hedge up to there. I'm just going to give that a little bit more of an offset, because this basically is now the inside bar. Yeah, so we're 25 minutes inside bar on that move. So if we break that low, we're off. If we break that high, we're off. Until then, this is the control candle. And when we break out of that level, that's probably what the decision is going to be on the move today. So okay. I'm going short on the S&P, short on the NASDAQ. It's all gone quiet again. Tick volume indicator is expensive. It's free. I'm not paying for this. Tick strike. If you want to buy tick strike, it's only $99 a month. It's not expensive at all. $100 a month. In the grand scheme of things, it's not much. Just got out of that. Okay, I'm going to leave this because this is going to be one of those days where you are just going to get crucified and destroyed. So I'm just going to take 2 hedge losses on this today, I think. I'll move that order. Sorry. I've just closed out these longs on the other account. That sounded like we were going short. We broke the lows and it's all gone quiet. There's no volume today. This is just going to rotate. So I'm just going to either take the win on that if we break long, take that off as a hedge, or this one's going to get hedged as well, which will be about 2,200 loss. I made 1,800 this morning, so it's going to be roughly a $300 loss day. But there's no point in trying to push this. There is absolutely no directional bias at all today. So these are the days where you have, if you're scalping on days like this, what you're doing is you're going, oh, it's a short. Oh, I've stopped out. Okay, it must be a long. Oh, I've stopped out. It must be a short. And all you do is you basically lose 10% of your account trying to figure out which way the market wants to go. Market hasn't got a clue which way it wants to go. So what it's going to do is take money from you all day long. So these are the days you just go, I'm not interested. Now the sellers come in. So yeah, it's just waste of time today. New Zealand dollar, US dollar extended to the upside. Obviously, that's a nice reversal. US dollar CAD drop to the downside. That's just coming off of ADR at the moment. So that's nicely extended as well, I think. Not quite. We haven't quite got below the 75, the 25 level on the RSI. Here's an ADR hit. This area here is where I'd be much more interested in longing it, which is 150 ADR. So if we can push down further today into there, that RSI will get extended and I'll take a little long on that. US dollar Swiss. Just tapped into ADR, got out of that short today. It's just hit ADR, literally. And the reversal alert was literally that candle. So you're long on that one. Now we're selling US dollar yen, extended to the downside at ADR. So obviously I'm short on that. I'm not looking to long the yen at all at the moment. So nice 50% retracement on the yen. So where we go from here, nobody knows. This is either going to be a new leg up, or we're just going to put an A-shaped recovery in and we're going to get that drop and that power up on the yen. So we have to wait and see on that one. RSIs, there's a few to look at. We did get through these this morning. Let me just turn tick strike down a little bit. Otherwise, it's just going to be annoying. I think I might have just got hedged. No, not quite. Miss me. So the NASDAQ's out the lows. The DAX also look just broken the lows. So this does feel heavy today. Feels like it wants to go short. Might not go anywhere though, so just be careful. We'll have a look at where it's potentially going in a minute. We've got plenty of time because it ain't going anywhere. So from an ADR perspective, hourlies, we've got the Aussie dollar, US dollar. That's extended hourly RSI. First entry's just gone in on that one today. I need to put a target on that one. Okay, so targeting that propulsion move. So this high. So looking for a target at that propulsion, and then obviously potentially bounce up, or we'll just come down and fill that one. So that's a nice extension to the upside. That's also extended on the 4 hour. We looked at this one this morning. Nice 24.72 bounce. Yeah, so the market tends to bounce off the 24 or 72 moving averages on the daily in a trend. So this is a deep pullback. So if market structure is going to shift, what you tend to do is you pull down, you hit the 24, you pull down, you hit the 24, you pull down, hit the 24, pull down, hit the 24. You keep doing that until you hit the 24 and you don't make a new low, and then you push up to the 72. That's your market structure shift. So then we'd be looking to pull back from the 72 and then break the 72. Breaking trend. Yeah, so shorting that back down into there, assuming it's going to do that, or it might just be a deep pullback on a new leg down, one or the other. It will be one of those. Aussie dollar, US dollar, euro, US dollar, same thing. Nicely extended to the upside. The hourly, sorry, it's a 4 hourly. We looked at this one. That's an ADR hit at 125. We just about got extended, not fully. So that's coming down quite nicely. You've already had the reversal alert on that one. This is completely range bound at the moment, as you can see. We are not going anywhere. So you're up at the highs of the range. So initial entry somewhere around here. Take a second up there. What a pain in the arse this index is today. Just not moving. Literally, the NASDAQ's the only thing that's moved, and it's broken out by one candle. These are the days that test you. Euro, US dollar. So that's a nice short opportunity. New Zealand dollar, US dollar. Again, nice short opportunity. Nice push up into propulsion. Double top. Over ADR. That one's coming down nicely. Nice extension on the RSI. And then we've got the US dollar CAD on the hourly as well. So that's extended to the downside. So a lot of these, obviously, you can see they're ADR extensions. So when you get ADR extensions, a lot of the time you get an RSI extensions as well, because it's a big, strong push in one direction. All the others are 4 hours. So Aussie CAD, we've looked at on the 4 hour. Nicely extended to the upside. Got 2 positions on that one already. Just looking for some kind of continuation pullback into propulsion. Aussie dollar Swiss, big extension. So the Aussie Swiss and the Aussie yen are the 2 biggest ones at the moment. The Aussie Swiss is a very nice double top bounce straight off of that weekly level. So it's pushed straight up into the weekly high to the pip twice and bounced. So if we break that low, we should be off. My targets are back down here, which is a 50% retracement on that move. A load of buyers coming in now just to annoy me. I'm going to blow this evaluation this afternoon if I'm not careful. Stage 2, fail on day 1. Because I exited those longs, basically, I've already taken a loss. I've hedged in $1,000. I've taken a $500 loss, and I'm going to hedge in at about $700. My maximum loss limit is $2.5 grand. So I'm $300 short right now if this pushes long today of blowing the account. That's how tight it is. So Aussie dollar Swiss, very nice extended to the upside. Good chance for a pullback on that one. Aussie dollar yen extended to the upside. Again, all these yens still like them as a short, still do not like them as a long because of the intervention threat that we've still got hanging over us on that US dollar. So much rather be shorting it. That's a nice double top on the monthly there. So nicely extended. So just looking for a pullback down on that one. Aussie dollar, US dollar extended to the upside. 4 hour. That one's already turning as well. That was an hourly RSI extension as well. Already in that one. First entry short. Looked at that one already. Pound odd is extended to the upside on the 4 as well. To the downside. First entry taken on that one today. So this was an H1 M5 mean reversion entry a few hours ago. So first entry taken on that. Looking for a push back up into that propulsion gap. 4 hour. Nicely extended. We got a double bottom coming as well on the monthly. So if this trade doesn't work out and we don't get to target, we may push out of that propulsion, this low here. We might just push up into there and pull down. If we do, we're taking a second entry there to get out on a double bottom bounce on the monthly level. Pound New Zealand, same trade basically. Pound New Zealand, pound odd kind of moved the same. We've had a lot more movement on the New Zealand than we have on the Australian recently because of the news, but that's nicely extended just about really to the downside. But that's a lovely little accumulation area there that we are testing for the first time. The problem with this one is this is either an accumulation break, which is going to be a price discovery, which is going to work, or it's going to be a price discovery failure, which is just going to go up and test the other side. So as a long, this could just tap into that level and collapse. If it does, you've got to go all the way back down there. Might get some movement out of that level, but unlikely. It's more likely to break off of that high there. So that sort of movement, failing that, you're looking at like 300 ADR to the downside before this thing actually gets a proper pushback potentially. So a bit more tricky, that pound New Zealand, not a great entry. New Zealand CAD is nicely extended to the upside. That one's already gone. New Zealand dollar Swiss still extended. So this one has been the mother of all downtrends. Oh, God. It's going to be one of those days today. So the S&P's just pushed back up inside the opening range. The only one I've actually bothered to get out of because I thought it might break short. I'm still not hedged on it. On this account, that account, I've got out of the longs and taken a loss. So on that account, I want this to fly. I don't want this to fly. Sorry, on this account, I want this to fly. On that account, I want it to drop. I'm hedged against myself across 2 accounts. That's how bad this day is going. Just kind of want to shut it all and walk away today. I've had enough. So yeah, lovely downtrend on this. This is kind of what I was talking about a minute ago, using the 24 and 72 as bounce points in strong trends. Yeah. And then we break to the upside. So there's your W pattern reversal. But what we've done here is we've broken back down and made a new low. So potentially this is just peaking our head above the pulpit and carrying it on that downtrend. So this is a lovely 50% retracement for a new leg down. Yeah. So I like the look of that where it is at the moment. The Swiss franc, obviously, we've had lots of movement off of the back of the war with the Swissy. It's a safe haven currency. So looking for it basically to potentially power up again as we get more escalation in this conflict. If it happens, money will go into the Swiss franc, will bring everything down against the Swissy. So I'm just about to get hedged again. I'm re-hedging, basically locking in a $500 loss and locking in a $1,500 hedge. This isn't going well. Stage 2 is one of those. This is one of those times where you just think, screw it. Close it, cross your fingers and hope. There you go, re-hedged on the S&P. So guaranteed loss of 2,100. Can't touch that account today because if I touch that account, there's a chance of blowing it. So I've just got to lock that loss in and try and get it back tomorrow. Nothing can do with that one. This one, however, working like a dream. New Zealand dollar Swiss. So that's that one. Looks lovely for a pullback. So that's a 50% retracement. Pullback short. No bias long on the New Zealand dollar or the Swissy, really. So New Zealand dollar yen, nice extended to the upside. Again, no problem shorting anything against the yen at the moment. So that's nicely extended. Good dive. No, it's not quite divergence, is it? So you've had your reversal on that one short. So you will already be in that one from this morning. And New Zealand dollar US dollar we've looked at. That's extended on the 4-hour and the hourly. There you go. So there's all your RSI extensions. A few opportunities to get into there. These two are the ones I've got into today. Everything else is just sitting there at the moment, waiting. Waiting and going nowhere. Is the SAHEA still profitable if you do not manually intervene and just keep the initial settings? Yes, but backtest it. Yeah, I mean, that's why I used it, because of that's why I built it and put it out there, because the backtesting is profitable anyway, but it's not as smooth of an equity curve because it's dumb, obviously. You're kidding me. So basically, it's just re-hedged me on the S&P. Literally there. It's re-hedged me, and now it's coming back down again. Oh. Couldn't make it up. Couldn't actually get any worse start to a stage 2 evaluation. Never mind. So yeah, all my back testing, yeah, I mean, it's all profitable, but obviously it varies massively. So depends on the settings that you use. There's no right setting, there's no wrong setting. All of these system parameter permutations are profitable, but the profit ranges from $20 to $1,500. In this particular test, I don't know which this was a DAX. And you know, I would never vouch for any EA to be left on full autopilot, because you can't rely on anything to work constantly, because the market isn't constant. The market changes all the time. We're in earnings fortnight at the moment, milking it because it's earnings fortnight. When it's not earnings fortnight, there's a lot less volume and a lot less movement. Therefore, you have to wait for the market to constrain itself and then explode again, and then you make more money. And you've got to be able to look at days like this, for example, where it's not moving anywhere. You can't make money on days like this. If you are lucky enough to go, oh, I tell you what, that doesn't look like it's going long. It looks like a double top. I'm going to short that. That's the trade today. That's the only way you would make money today, that one move. If you didn't take that one move today, you're just getting chopped to pieces. Days like this, you've just got to go there. But as I said, at that point, you could shut your longs here and it looks like it's going to go short. It feels short. If I had shut my longs there, I'd have been out of that with a profit, but I wasn't. everybody's going to make a different decision. Look at this thing, right? 5, 10, 15, 20, 25, 30, 35, 40, 45 minutes. Inside bars, apart from one candle, we're inside bar on that 15-minute candle. The EA right now is long only, as you can see. I've adjusted that short manually. If I hadn't adjusted that short manually, it's still sitting down there. So I'm not hedged on it. So if this now does go long and hits to our target today, brilliant. On that account, not brilliant. That account is a $2,500 loss. This account at the moment so far today has the potential to be $1,000 win based on one decision. And all you're doing when you're looking at back tests with anything in trading, you are looking at that one decision. But that one decision is made every day in exactly the same way. But that's why you have traders sitting in between the keyboard and the chart, because there's nothing on the planet that knows how to extract money from this every day without any kind of experience. So you can let it run and you will have big wins, and then you will have losses, and then you'll have wins, and then you'll have losses. Your job as a trader is to try and eliminate those losses as much as possible with a strategy that has an edge. So there's a long-term edge. As same with the opening range breakout, there's a long-term edge. But there's going to be down weeks. And this is why I keep saying to everybody about prop. If you start your evaluation on day one and you have a 5-day win streak, you pass your evaluation. If you start your evaluation on day 4, you'll have 1 winning day and then potentially 5 losing days and fail your evaluation. The strategy over a period of a year will produce 150% return. But the day you started it, it produced 5 losing days in a trot. Throw it away. It's rubbish. It's not rubbish. It's just a day. Yeah. And you then throw in the, shall I make changes to it because I don't like the look of that price action today, and all of a sudden you get completely different results. At the end of the day, if you want to learn to trade, you've got to learn to trade. If you want to make money as a trader, you've got to learn how to do it. EAs aren't clever enough. And artificial intelligence might be the answer. But then again, you're putting your hands in someone else, because artificial intelligence is the person you're getting to trade for you. Who's to say they're not going to go mental one day and just dump your account? You've got to do it yourself. This is a sole job, unfortunately. I hate you. I hate you today, S&P. You're ruining my life. Well, you're not here. You're making my life happy, but over there, you're making my life unhappy. There you go. So there's a prime example of difference between intervention and non-intervention. So non-intervention, break even. Intervention, $1,500 loss. However, other days you've seen me in here, intervention, like yesterday on the NASDAQ. Yesterday on the NASDAQ, intervention made $300 profit. It would have, if I hadn't have intervened, locked in a $1,400 loss. Trading. Decisions. We still haven't got anywhere on the NASDAQ, look. So now we've got divergence with the S&P and the NAS. So the NAS is putting in bearish market structure. S&P, bullish market structure. Which way is it going? One of them days where you just need to just walk away. But then look at that. That's this morning's NASDAQ DAX gain. And that's where I'm sitting right now. Which is, again, a totally different result. All 3 of these accounts all sitting in totally different results today. 2 of them with the same broker. So I wish it were that cut and dry, John, that I could just say yes. It's not. Very different slippage as well. Look at my S&P trades. If I both of those orders bang on the ECN account. Prime account, I got slight slippage on one. No slippage there. Very, very different, isn't it? Again, like someone else just said, you get totally different results on the same broker with the same account type as well. It's all down to the fills, isn't it? I haven't covered oil this morning. We looked at it briefly this morning when we first came, this afternoon rather, when we first came on. So we've got this double bottom which has just happened. We seem to have stalled out again, look, on oil. So this feels again like it wants to come down a little bit, oil. But current climate means we should be seeing new highs put in on this. So structure, we're expecting a long. We're getting a double bottom, and we're getting a pretty heavy double bottom as well. So I'm still going to get out on this one. If we get another quarter of an ADR drop out the lows today, I'm going to take 2 losses on it and then watch to see what happens at this level. So this high here and these lows, that zone, which is 150 ADR, is basically what I'm looking at if we break down. So if we do break down, that is probably the bounce point. If that doesn't hold up, I'm just going to have to can it, unfortunately. And this is kind of why I stopped trading oil, because this is what I had to do last time. When we had this beautiful range, which just kept playing out over and over again, we had that expectation of hitting $95 a barrel back here. No, sorry, it was back here, wasn't it? That's December, sorry. It was back here, yeah. Was milking it, making lots of money out of it. And then all of a sudden, it all went wrong. No, sorry, that's a different place. It's the wrong bit. Here, this is where I was making all the money. And then we had that catastrophic collapse where we were forecasting $95 a barrel, which we eventually hit on Brent, not on WTI. And it's the same thing here. Markets forecasting $100 a barrel to $160 a barrel in some cases now, yet we seem to just be dropping, especially in a time of war when you'd expect oil price to rise. So I'm going to watch this one, but I'm going to jump ship on it if it doesn't hold today. So if we do get a down day today, I'm just going to let it take me out naturally. Probably be overnight, I would suspect. Dow is now nicely out the highs. New high of the day. NASDAQ, we're just basically back inside the opening range. So we've done a 1-hour move to the downside and we're back to origin. So I wanted to look at the possible targets. There's a big buy order just come in. So downside and upside targets on the Dow today. Very difficult today. I mean, we're approaching ADR. So obviously first target I would say is always going to be ADR. Because that's what we typically do in a day, the average daily range. So down. You got a high coming up there. We've already gone past that low. So yeah, excuse me. This is the kind of fly in the ointment today, this weird price action, meaning that there's no obvious level you can pick. That high is an obvious level there. So it's that low, that high, which is 150 ADR. So if we don't stall out at ADR, we'll be going all the way up to there before we're going to find some sellers. So there's loads of upside on the Dow. Downside on the Dow obviously is down there, but we're not going short, we're going long. S&P upside, very much the same. We're looking at this level here. Somewhere around there. I mean, there's no confluence at all, look. So we got this area here, but there's just nothing over here, nothing here. There's no reason for that line apart from this propulsion move. So we had this weird expanding accumulation, which we broke short from, which is exactly where we are. So this could be where we stall out. Not even 1R to the upside. Just not going anywhere, is it? So yeah, there, and obviously then we've got the high again up there, which is more logical from a support resistance perspective. We've respected it multiple times. That's 150 ADR. But as you can hear, it's going to take a hell of a buy order to get us up there, isn't it? There's no volume today. So that's your upside on that. NASDAQ, obviously, at the moment, the NASDAQ is completely stuck. So this could break in either direction. An upside break on this, you're going to knock your head on the pre-market high today, aren't you? But if you break that pre-market high today, which it sounds like it's trying to do, I'm just watching the NASDAQ, look, on the 5-minute chart. All this buying coming in. Look, just not getting anywhere, is it? But your upside potential is this same price action that we've got there and that level. So you've got to say your upside on the NAS is more likely going to be somewhere around this area here, which again is ADR. So ADR looks much more logical today. It's more of a zone anyway, isn't it? So it's somewhere in that area we will probably find we hit our head. But this is struggling to get out the highs today. So if there's any kind of selling pressure that comes in on the S&P and the Dow today, this is just going to get slaughtered. So we've got a little gap to the downside to do as well, which we didn't fill overnight. So we have got that hanging over our heads as well to get that gap complete, which we didn't manage to do this morning. The S&P also didn't manage to get the downside done. The Dow did. Hard session today. Can't have it easy every day, can we? I'm calling it on this account. So just waiting to see what the price action does on this S&P. Okay, so trailing stops in place. So this morning locked in 1.7%, something like that on the NASDAQ, on the DAX rather. Just locked in that $1,100 loss on there, and we're running on the S&P. So basically, whatever I've banked the DAX this morning. So whatever this gets to above that figure today with these trailing stops, that's my profit off the afternoon session on this account. That account's screwed. Not screwed, but it's locked in. I can't move it. I can't move it. That's the problem with bloody prop. The margins are so tight if you want to make some money on it. Obviously, if you use tiny little risk, it's not a problem, is it? But when you're going in high risk, i.e. you're trying to pass it quick just to get paid like 4 or 5K, the margins are so tight. Got to be so careful of that $2,500 drawdown. So I've got 5K drawdown on the account. The best thing to do today is just lock that in and forget about it and come back tomorrow and trade that second part. It's a bit too tight today. 2,100 locked in. Which I shall shut end of session. Get the feeling with oil that so many participants are expecting higher prices. It's just dumped to shake the majority out before it hits those highs. Yeah, could be. I'm not quite sure why we're struggling so much with oil prices at the moment. It's just not It's just a bit weird.
Thanks for the follow.
Thanks for the follow, whoever that was. Ahmed, I've got my volume up. Welcome aboard. Yeah, it's basically that propulsion gap's just filled on the S&P. When we're in a time of conflict, typically oil just doesn't stop rallying. And the trouble with this conflict, I think, in the Middle East is it's just so protracted. It's just been strung out so much with not a lot happening and these little flare points. So the market suddenly started to buy it and they were like, hang on a minute, this isn't happening. We're just not getting that traction that we would normally expect to get. So I don't know. It's just going to take a while, I think. But it will get there. We will rally. Just going to let that run. So at the moment, looks like I'm locking in somewhere in the region of 1500. So it'll be a 2K day. All in all, which is not a bad win, considering this market's been an absolute pig this afternoon. But the vast majority of that profit was off the DAX this morning. So I'm just closing out the other account as well. So locked in just under 9% on that one. Just not happening this afternoon. So walking away with any kind of win is a win. Out of the Dow long, hopefully will drop now. Good one, Amy. I think you probably might be okay. If you're hedged on this, yeah, it's so difficult to pick a spot. So difficult to pick a spot today. But you're so close to ADR on the Dow. We've had a nice, big, strong rally here. It's going to pull back on that move before it pushes. So it's just a case of, is it going to do it now or is it going to wait until ADR? Difficult. This is always difficult when there's no levels to pick. There's nothing obvious on that chart that jumps out and says, this is where we're going to sell from. That's where I think we're going to sell from. But that's too far to do nothing's too far. I mean, the market will do what the market wants to do, but it's unlikely to rally with that much strength to that level in one go. You'll find it very difficult to get that much legs. But we will see. Instead of getting out of those positions, could you have just waited until the close to see if it either pick a direction or then close out the hedge loss? Yeah, can do. Do whatever you like. There's no right or wrong. I'm still in this one. But obviously the direction is now long. The trouble today is it took half an hour to decide on direction, didn't it? We now know we're long. So what we're doing is, when this is the whole purpose of the hedge strategy, is to buy you the time to look for where it's going. So if there was an obvious level like this NASDAQ today here, if there was an obvious upside target that I could say that looks like it's probably going to try and reach for that level and bounce, I would have left that trade on. There's nothing on the NASDAQ you can look at now today and say, oh, that's where it's going. Because we're at that peak high there. This day here expanding wedge day is just a mess. It's beyond ADR for me. And I know we struggle to get beyond ADR, especially as this thing is stuck. Everything else is rallying now. This is just stuck. So this one is just a non-starter today. It's not getting anywhere, is it? At the moment. But I could wait until, 3 or 4 hours time. And if we're still sitting around there, I'm still not going to be any better off. If we're up there, I'm still not able to really go, well, with any certainty. Whereas if we were sitting here, for example, pushing today, I would be going, yep, that's where we're turning. Why? Because we've done it twice already. So there's going to be limit orders sitting there. I can't say upside at the moment. There's anywhere I can see that is obvious, apart from beyond ADR. That's why I've just decided to get out of it. Because I've got a profit. That's the thing. Yeah, this is what I say. It's all about the portfolio profit. Here come the sellers. Amy's going, that's my focus. Not that, or it's just banking money. And I've got an opportunity to just close that out. That is in higher. So therefore that is paying for that. This one's made money. That's a winning day. That's all you're after, isn't it? A winning day. The amount you're going to win is going to be dependent on how everything cleanly breaks or it doesn't cleanly break. But this is a good example of a nightmare day. Some days are like this. Sorry, Amy, it doesn't sound like that was a sustained selling rally. You might have to hang on a bit longer. See, I'm now of the opposite opinion. I want Amy to lose because I want this to rally now and just keep going because I'm long on the NASDAQ, on the S&P. So I want the Dow to rally as well. Thinking I may give trade day a run. Expand the futures portfolio. Trade day? You're going to use, is that a prop firm? Yeah. If you want a prop firm to trade with, take Profit Trader if you're not already using them. Who I would suggest. Only reason being, they've got really good trading conditions. That's the key for me. That is unparalleled in the futures market at the moment. No one's doing this. And I know people that have been paid. So I can verify, well, you're only obviously taking my word for it, but I know people who have been paid. And it's same day. So say, for example, this was a futures account. And today was my first day on a funded account. And I've just banked 2K. I can go into my Take Profit Trader account, press the withdraw button, and take all this out today. Then tomorrow, if I make 1,500, I can go into my admin area and press the button and take that 1,500 out. You can take the money out same day, instant. It's like a bank account. No one's doing that at the moment. Really good. Same day withdrawals, are they? Oh, are they trade day the same, are they? I've not looked at them for a while. Oh, those two guys, yeah. Is it true it's difficult? If they answer yes to that, I'm never going to talk to this company again. Oh, no, I was going to say, if they answered no, I was expecting the answer to be, no, it's not difficult to become a successful trader. Here, sign up with us and we'll show you how. But yeah, no, they've answered yes, which is good. What's their rules? Is it end of day drawdown or is it? Yes, it is. Good. Okay. So that's good. Yes, they look just as good. How much is it? $275 a month. So the only thing I would say is Take Profit Trader, you get 40% off right now. So their cost is 330 minus 40%. Pushing again. Sorry, Amy. So you're only paying $198 a month for a 100K account, whereas here you are paying $275. So it's $100 a month more expensive. Unless these guys have got an offer on. I don't know anybody that's traded with these, so I'm about to start another evaluation with these guys because I've traded with them before. I've never been funded with these guys though, so personally, but I know somebody that has. Well, I know two people now that have. I kind of want to get back into prop, which is why I'm doing this evaluation with Alpha, but I'm just fingers burnt at the moment by my Forex funds. So I've just kind of taken weeks off of just not using prop and using my own capital, which is working out really, really well. But I can't trade futures with my own capital because it's too expensive. So I'm thinking of maybe jumping on board with these guys again. But I'll have a look at them. I'll have a look at their website. 0 payout restrictions. Yeah. Looks good. I just end up blowing futures accounts. I'm just useless at futures from a psychological perspective. Futures is much more of a game because you can only trade single contracts. The risk is so much higher, but the reward when you just have a winning couple of days is way better, which is why I'm like the idea of the initial take the money out, because all the other futures firms, you've got to wait for payday. It's a minimum of 5 to 7 days, if not longer, before you can get paid. Now they all seem to be cutting each other's throats to just get you on board, basically. So they just do whatever you want them to do, because they're relying on, obviously, the same as the others, getting all the money out of the people that don't know how to trade and will blow their accounts constantly and do the resets. There's somebody today sent me an email saying there's $50 resets. There's an offer on at $50 resets on any size of account. You know, so they're all upping their game. I think they're all a bit worried that they might all go out of business if my Forex funds loses their case. But who knows? Who knows what's happening at the moment? On our way to target on this, look, S&P, after all that mucking about, we have actually got a directional bias now today. So unfortunately, there's not a lot I can do about it on that account. It's too close to blowing. I can't touch it. $400 away in drawdown of blowing that account on day one. Basically, this... Oh, my God, why is this so big? So my actual equity is 47,911. So with that locked in as loss, hedged on these two, if I get out of these longs at exactly the right turning point and we come back down and retest that level, I can exit this one with a profit. This one is a whacking great hedge. And as you can see, we haven't even moved 1R on this. We've literally opened and done nothing. So there's absolutely no way of getting out of this hedge unless this decides to run a crazy distance today, but I can't see anywhere to get out. So if I close these longs here, I'm going to bank a nice amount of money, which is going to obviously put my equity up, but my equity is going to stay the same. And if it goes into drawdown by $400 more, I'm stuffed, basically. So if that pushes up $400 more in drawdown after closing those longs, that's it, kaput. So better off just locking that in and play that one again tomorrow. It's the only one I've got running at the moment. I'm easing myself back in. Normally I run multiples, but I'm scared at the moment. Rhythmic went ballistic this morning. Couldn't cope. Couldn't close out my NASDAQ sell. Reversed position each time I tried to close. That's the other thing, right? Whenever I've traded with my own capital, I never have any problems with anything execution-wise. On prop, it seems that trader weight goes down all the time. FTMO, top step people are always moaning about trader weight going down. Anybody that's trading with Rhythmic through Trading View say that the Trading View connection keeps going wrong. You're now saying that Rhythmic went mental this morning. That doesn't happen in the real trading world because other traders are using that software. We don't have those problems. But in prop, for some reason, I think it's because it's all demo. You're not trading with real data. I think that's the problem. You get all these weird connection problems because it's not real. But then if they're trying to simulate a real trading environment for you, it doesn't work, does it? People have had accounts buggered up because they couldn't exit positions. You know, so then you have to argue with them, and it's just, you know, it's just a pain in the backside, isn't it? But I suppose we ain't got a lot of choice. So S&P still rallying. I'm just going to let this run. So I'm going to lock in minimum of 2K there. Something like that anyway. So take that 1100 off. That's going to be turning into 2.5K day, which is nice. So I'm just going to let that run with that trailer and get to wherever it gets to. When it decides to turn around, I'll be out. And that's it. Flat and done on that today. That's all I've really got for you today. Bit of a crappy session today, isn't it? Depressing movement today. S&P getting out at 43.22. Is there any particular reason for that number? I mean, anywhere in there, as I say, you can pick literally from where we are right now at ADR, anywhere from here to 125 ADR is where you are going to find some kind of resistance. Large volume there, is that right? Could be spoofed volume though, don't forget. Yeah. That is exactly where you should be getting out, I reckon. I went through the SAH video, but could you quickly describe the 3 exit options? So we've got a hedge here, so that's nice and easy. So so when you're hedged, the normal exit mode, so these are the 3 options you've got. You've got that set to false. Yeah. So hedge recovery is set to false. So what that basically means is when you're hedged, the targets automatically get moved to TP2. This is not a great example today because you can't even see TP2, but it's 5R as default. Yeah. So basically, still pushing. What the market will do, let me just turn tick strike off because it's driving me nuts. I don't really need it at the moment. So what the market's going to do, basically, if that is set to false, is it will push. If it hits your TP, it will then just sit there and wait until the closing time that you set, not that one, the stop trading time, which is there. It will just basically wait until it pulls back down and then, or wherever it goes, if it pushes up or it pulls down, wherever, it just will close you out at, in this case, 22.10. So all that happens is if you get hedged, it will just either hit TP or it won't, and then it will close you out at 22.10 with whatever. So the idea being is if you hit 5R you're going to be somewhere around the average daily range most of the time. Usually, by the end of the day, you get a bit of a pullback. But it's not often we have daily candles which close like that. Yeah, we close at the high. What we normally have is a candle where we have a wick, meaning we've pushed up and we pull back before the close. And that pullback before the close is caused by banks and institutions profit taking on the daily move, which is why you usually have a wick. So the idea being, if we hit 5R, we'll probably pull back a little bit. If that pullback is bigger than the distance of the hedge, you're going to come out with a break even or a profit. So that is the false setting, i.e. no hedge recovery. We just get out at the end of the day with whatever we've got. Whatever we get, market will give us what it gives us. True, with aggressive turned off, is the conservative hedge exit. And basically what that will do is exactly the same thing. If you hit the 5R target and it pulls back, what it will do is it will calculate, in this case, 1/3 of the profit you made on that move. And when we pull back and you have 1/3 of that profit available, it will close the positions for you. So it's basically saying, if we've pushed and hit TP, what I want you to do is, let's say we made 5K on that move. Let's make it easy. Let's say if we made 10K on that move, right? What we're going to do is we're going to wait for the market to have pulled back far enough that I'm only in 7K of drawdown on my short positions. So there's your hedge. I'm short from here. I'm long from here. I've made 10K on my longs. When you pull back far enough that my short positions are only in 7,000 in drawdown, I have a 3,000 profit, close the positions out. Yep. So the conservative hedge exit is basically saying, if we get a big run and we can make a little bit of money, close it out. And that will close out anytime you get to that 3K target. In this case, that's 0.3, which is 30% of your target. So on the NASDAQ today, I don't know what TP would have been. The hedge was 1100. So that would have been, that TP would have been about 5.5K. Yeah. So that TP there at 5R would have been 5,500. So if we hit that 5,500, it would have gone, what is 30% of 5,500? If we pull back enough so that our P&L, our net profit open, is above that figure, shut the trades. Yeah. So that's the conservative exit. The conservative hedge exit and then the aggressive hedge exit turn to on. What that will do is when you hit the target at 5R, it will get you out of those trades, and then it will immediately place another 2 short pending orders underneath the low of the candle. So when we hit target, we say, okay, when we start to sell, I want you to get me in with 2 more positions. So we're dollar cost averaging into the move. So where our short play is there, if we get triggered into another short, what happens is our average price moves to there. So for us to get to our aggressive exit target, a 30% of whatever that TP was, is going to be much, much quicker. So you can normally get out within 1 or 2 pullback candles. So the idea being is, if we've pushed really hard, any kind of pullback that lasts like 30% or 20% of that move, a flag break, yeah, will get you out with a profit. That's the aggressive exit. The downside to the aggressive exit is if it pushes, triggers you into 2 more shorts and then pushes again, you've got 2 shorts in drawdown, 2 more shorts in drawdown, so you're taking twice as much loss. So if it pushes much further against you, you're going to take a bigger loss. So that's the downside to the aggressive exit. The upside is it hits target a lot more often and a lot quicker. The downside is you can take a very big loss. So I would only recommend using that if you can watch it, because if that pushes down and you suddenly get a whacking great buy candle going and you're like, holy crap, you can re-hedge it manually yourself. So you would take 4 longs there because you've got 2 shorts there. You've just taken 2 more shorts on an aggressive. So your 4 shorts, you need 4 longs on to hedge it. But that is that gets out really easily. I haven't had one for a while. Oh, yes, I have. There you go. There's a prime example. There was one yesterday. No, not yesterday. Whatever day that was. That's an aggressive exit, look. Ah, right, sorry. So this was the one I ballsed up. So this was me fat fingering. So I forgot to change the time to exit because the clocks had changed. So, of course, it held the position overnight. So this is an example of an aggressive exit. So you get hedged, you push up, you take the profit off the longs, and you enter more shorts, and all you need is a quick push down to exit with a profit. Yeah. So I've got, you can see there's short orders there and there's short orders there. The overall of those two plus those two is less than that. Therefore, it's a profit. Makes sense? Hopefully. Best thing to do, if I was you, is go into the strategy tester and set it up without that, with both of those set to false, right? And run it for a month and watch what happens. So I don't know what this is set to do at all. I've got no idea. So this is just at random. I don't even know if it's set to the right times. But just let it run and see what it does. So it's got hedged there. And it's just going to close it out as a loss. Yeah. So it made a loss. There we go. We're hedged again. It's typical. It's not going to hit target, is it? It's going to be one of those periods of time where it's just having a nightmare. There you go. Hedged. Nothing. Hedged. I just want to see us hit target. Right. So there you go. So we've hit target on the shorts. Okay. So we've banked $2,000. Our loss recovery target, which is in this case 20% of that banked profit, is 419. So when that net profit there, by this price moving up, achieves $419, it will close the position out. If it does. If it doesn't, obviously, we just take a loss, which we don't. So if it had moved up enough, it would have got out of the position. So that day is the 6th of July. So if we replay that now with that on and that on, and look at the 6th of July again. Okay, so this is the 5th of July. Right, so this is the 6th. So we push down. Going to hit target in a second. There we go. So we've hit target. Now you can see it's placing a pending buy stop order above that high. Yeah. So our loss recovery target is 471. Net profit at the moment is minus 435. So it will basically keep moving that pending order until it triggers. So what it does is it just moves the pending order down above the candles until we get some buyers into the market, which triggers our long. So now that 471, which we didn't achieve before, we probably won't achieve it this time, actually. It doesn't pull back far enough. No. But you can see the profit is much lower, bigger now. The loss is much bigger because we're not only making a loss on that, we're also making a loss on that. Sorry, that. Making a loss on that as well. So it makes more of a loss. I didn't see what the loss was before. 1532 was the loss. So with aggressive on, the loss turns into 3K, double the loss, because you've got double the positions on. That's the danger. But in most cases, you will find we get a pullback. It works less on the DAX than it does on the US indices, because US indices tend to get a little bit of a rally towards the end of the day. With the DAX, we got the New York session, which can obviously push in the same way as the previous DAX movement did. So it's a little bit more tricky sometimes to get out. But there you go. So that's in a nutshell what it does, those exit models. They go out of the S&P. So 2.5%. So this could be the start of the pullback. We'll see. Dow hitting ADR. Yeah, it depends on your broker, but it's close. I think it's hit on this one. So we're tapping straight into ADR, look. Not quite, we're just shy, but pretty much. So this is the normal average daily range of the Dow, of the S&P. Sorry, it was Dow we were talking about, wasn't it? Not the S&P. Again, it's just shy. But there. Just about to get potentially a reversal alert as well. Right. From your backtesting using the options set to false and existing with whatever you get at the end of the day, how often did that work out? So the backtesting showed that you get around about 35% of the time you get a clean break. Of the rest of those positions that get hedged, around about 30 to 40% of those will work out into a profit. So it's around about 65% of the times you will have basically a winning instrument. But this is the downside, right? Individual backtesting on an individual instrument is going to not be what you achieve because you're going to be running multiple instruments. So as in the case here, I closed that out. How this ends up today with the EA in full automation, I don't care and I don't know, because my decision today was to do that and that to achieve that. So, this is what I keep saying. The backtesting will show you what would have happened with those settings over that period of time that you test with that EA. That condition you've just tested is never going to replicate itself again in the future. Just not going to happen. Yeah, there is no way of saying to you, this is the best thing to do. It just isn't, because you've got no way of telling the future, have you? Is it right now? Should I get out of this over here? Should I get out of this S&P now? Should I get out of this long on the S&P there and hope this drops? If it does, I'm going to exit that hedge beautifully today. If it pushes up, I'm going to blow the funded account. What should you do? Decision you've got to make. The EA doesn't know. I don't know. The central banks have got no idea if this is coming down or going up, because there's 10 of them driving price at the moment. And it depends whether there's 6 of them want to go short and 4 of them want to go long as to whether this comes down today. If 6 of them want to go long and 4 of them want to go short, it's going back up again. They don't know, do they? Because there's 10 of them and they don't know what the other 9 are doing. So, a back test is going to show you what the banks did every day for the last year. It's not going to give you any indication as to what you should be doing in the future. But it shows you what happens if certain things play out. So your job is to use the EA to execute the orders. If there's a clean break, just walk away with the cash and go, thanks very much. If there's not a clean break, let the EA handle all of the positioning for you, and then look at it, what it's done, and go, well, it's put TP there. That doesn't make sense. It's more likely it's going to bounce there. So just move that up. That's it. It will or it won't happen. If it doesn't happen, you accept the loss. If it does happen, you go, thank you very much. But the EA doesn't know where to put the orders, and there's no way of teaching it where's the best place to put it, because that is a decision that every trader is going to think differently. I'm saying that's the best place for a short to get out of today. Someone else will be sitting there going, no, that's the best place to get out today. Someone else will say, well, no, obviously the higher the Globex session before it started to rally is the best place to get out today. Someone else like Brian in here will be saying, no, where the open was yesterday is likely to be a bounce point. Someone else is saying, no, you want to go down to 5R because it's just going to do the gap fill and bounce at the gap. Someone else is going to say, no, it's going to bounce at yesterday's high. So which does the EA use? It can't. It's not that intelligent. And AI has to make that decision. I have to make that decision, and you have to make that decision. Do you agree with that being the best place for a TP? No? Move it. Where to? I don't know. No one can know, can they? So that's the best I can give you. There is no holy grail. There is no magic bullet. I can give you statistics on settings from the past, but that's not going to help you. Going to give you some information about the past. I think I might have the spreadsheet. Or is that a different spreadsheet? That's a different spreadsheet. But look at these test results. Yeah. So this is one of the system parameter permutation tests on the stock index hedge on the DAX using session exits. I ran 1,200 tests, 834 of them were profitable. So there are 30% of the settings over the period of time that I tested, which would have given you a loss. So the strike rate is 70% out the box. So if you were to go at random, flip a coin and go, I'm going to pick that, you've got a 70% chance of this giving you a profit out the box. That profit will range from $124,000 down to $90. Yeah. Which of those, and this is what's happened over a 3-year period. This was a 3-year test. 3-year test? No, this might have been a year test. I know this was a short test. This was a 7-month test. So this is 124 grand it made in 7 months, right? So with that setting, I don't know which one to use. So all of those produced a profit over that 7 months. Take this setting here and run it over a different 7 months, you're going to get a different result. If it's still profitable, fantastic. Run it over the next 7 months from today onwards. If it's still profitable, brilliant. But all we're doing with backtesting is we're looking at the past. What did those candlesticks do and what order did they do them in every single day? It's not going to be the same. But what it does show you is that if you did 1,200 different things on every single one of those days, 70% of the time you would have made money anyway. That's the edge. The edge is the fact that it doesn't matter whether you go with a TP1 at 1R, 2R, or 3R. It doesn't matter if your trailing stop is 1R or 2R. And it doesn't matter whether or not you use loss recovery target of 0.5% or 0.2%. They all made a profit. But every day, which one was best to use will be different. And every day, one of those would have been the right thing to do. But you're never going to know what that is because it plays out in real time. And that's where the edge comes in. Today is a great example of it. How to make money in a market that's impossible to make money out of. Yeah, it's just luck. A lot of it is luck. It will either go or it won't go. And if one goes and one doesn't, look, the difference here between me making a profit and a loss today was what? A pip. Remember I moved the hedge from there to there? If that had triggered my hedge, what would this have been? $1,000 loss. That would have been sitting at $1,500 profit. Yeah, that's the difference between today's result and today's result being different. 1 pip. That in a back test is, it's all random. Everything's random. It's got to go with what looks normal every day, and it's going to be different every day. Of these exit options, what do you find yourself using the most often? I use aggressive all the time because it just works. Brian, my exit on the NASDAQ was the top of the October 24 5-minute open. Exactly. See, Brian's got a different... This is, where you get out on everything is entirely up to you. Yeah, everybody's going to have a different thing. Same with trend lines. Yeah, you get a chart, you give somebody a chart and you say, right, go and draw me a trend line on this chart. Someone will draw it there. Someone will draw it there. Someone will draw it there. Someone will draw it like that. Everyone's going to draw trend lines in a different way because there are infinite numbers of points you could to start your line from. Yeah. Someone will draw a trend line like that because theirs have to be exact on the wicks. Someone else will draw it like that because theirs has to be on the body. Someone will go, I don't mind starting on the body and ending on a wick. You'll get 3 lines on the same period of price and they all end up in different places because everything in trading is discretionary, isn't it? Some people will only take trades short when we're above the 80 RSI. Some will do it at the 75, some will do it at the 70. If for an entire month it moved above the 70 and bounced, the person trading the 70 RSI is going to be going, this is so easy. Everybody trading the 80 RSI is going, I wish I could have a trade this month. Discretionary. Everything's discretionary in trading. Everybody that teaches you a mechanical trading system will have a failure because mechanical trading systems cannot adapt to price and they cannot adapt to market conditions. Because mechanical things will get you in, but you have to get out when you've got a profit on the table. And if a mechanical trading system says, get in at this point because it is ADR, go short, take a 2R profit, use a 1R stop. And if it moves down 3/4 of the way to my target, and I know there's a news event coming up in 5 minutes, I am going to discretionarily take that money and put it in my bank account. The mechanical system hasn't hit that, so it won't take the profit. If it goes up there and hits the loss, who's the better trader? No answer to the question. There's no answer to any question. All random. I haven't traded SIH yet, so I haven't been paying attention. Best thing to do is stick it in the strategy test app. Everything you do, stick it in the strategy tester because the strategy tester will show you what the best thing to do is. And the best thing to do is the thing that makes you comfortable and the thing that you are expecting to happen. People that put EAs on charts and go, boom, and let it trade, they go, why did it do that? You're never going to make it if that's what your approach is. What you should be doing is taking an EA, putting it in the chart and going, I don't like the way that does that. I'd rather it did this. Yeah, that looks better. Now, when you take a trade with that EA, you know exactly where it's going, what you're expecting it to do, and you will wait for that event to happen rather than making a rash decision. You've got to be able to look at things, let things play out, understand why things work. There's so much more to it than just sticking an EA on a chart. It's just the way of the world in trading. Oil's stuck. I can see oil stuck because my P&L's stuck. We haven't gone anywhere today. Look, still wish I'd have taken that long, but I didn't. Brian, sorry, I meant the 20th. Hard to see the dates on Ninja. Wish I could use the stock index hedge. Nope, you can't hedge. Nope. That's the privilege of living in the UK or not trading futures. Hedging's great. You can hedge. I was thinking about this, Brian, and this is one of the reasons I wanted to take out a new futures account. So I've got an idea for hedging in futures, which is using just the S&P and the NASDAQ. And you basically trade the NASDAQ. You take the initial opening range break on the NASDAQ. If that doesn't work, you wait for the NASDAQ to come down and you hedge by shorting the S&P when the break should happen on the NASDAQ. So your focus is only on the NASDAQ. So you mark up the chart on the NAS and you trade the NAS because the NAS moves quicker and more violently. But you can use the S&P to hedge because the S&P will get dragged along with the NASDAQ, won't it? So you can actually hedge in futures. You just have to use 2 different instruments which are correlated. Yeah. Yeah. So trade that, hedge that. So that long will go into drawdown, but your S&P will go into profit. And as soon as you get a positive P&L on the two, shut both trades at the same time. Or you could use two separate accounts. But if a prop firm catches you doing that, you'll get booted because you're not allowed to do that. It's against terms and conditions. They catch you. If you're doing it on two separate prop firms, it's not a problem. If you're doing it on the same prop firm, you'll have an issue. So take out one account with trade day and one account with those guys. You could put a hedge in place then, couldn't you? But I don't think that'll work long term. I think they're doomed to failure. But you can try it. That's what my plan was, to see if I could find an edge, but obviously using small contracts. AZ, last one for the day. Doesn't it make sense on most days to hold on to hedges for as long as possible, since towards the end of the day things slow down and direction is more clear? Yes. That's what you should do. And if you have all day, do it. And if you don't, up to you. I quite often go out and leave my hedges running and come back later to see where we got to, because you'll be able to see later in the day much clearer. I mean, it's obvious now. Here we were sitting here going, oh my God, this thing's completely directionless. Now we know it's obvious, it's bull. So I'll be looking for upside targets now. Leave it an hour and a half. That's one of the reasons why this dotted line is on the chart. This is 1.5 hours into the session. When you get to 1.5 hours into the session, usually you've found the high or the low of the session. You don't know which it is, but you've usually found one or the other. If you're close to a previous high at that 1.5 hour mark, there's a good chance you just found the high of the session. So if you can leave it an hour and a half, you'll have a much clearer understanding of where it's going. Why aren't Americans allowed to hedge? It's not so much Americans, it's the FIFO rule. So they have a first in, first out rule in futures. So you can't hedge in futures, because if you go 2 contracts long, when you press the sell button, it removes one contract. Yeah. And it removes the first one that you added. So it's a rule in futures. And a lot of brokerages, even when they trade CFDs in America, they won't let you do that. Which is why you have in MT5, you have hedging accounts and non-hedging accounts. It's just the way they're set up. I don't know why. Most US traders tend to use overseas brokers. But you can hedge across different instruments. It's just more complicated. The thing you've got to bear in mind with these, so when you're looking at using NASDAQ and the S&P for a hedge, for example, the ADR on this is 631. The ADR on this is 2,819. So that's how many ticks this moves as opposed to how many ticks this moves in a day. Massive difference. So on this one, you would need to use something equivalent to 3 times the lot size that you're using on the NASDAQ to achieve a hedge, because this is going to move 6, 12, 18, probably 4 times the lot size. So let's do the maths. Let's do it properly. 2819 divided by 631 is 4.46. So you would need to use 4.5 times the lot size on the S&P. Than you would on the NASDAQ to achieve the same result, because when this has moved down by 20 pips, this will have moved down by about 5. Never going to be an exact science either, so it's not an ideal situation. But it's a potential way to work it. There. Oh, excuse me. Right, I'm going to leave it there today. Anything you need, let me know. I'll be in Telegram. Back tomorrow morning, usual time, 7:50 for the Frankfurt session, and 1:20 for the US. Last day at 1:20 tomorrow. Next week, we're back to 2:20 because the clocks change in America. For me anyway, but if you're in America, nothing's changing. You're still going to be there at 9:30 in the morning. It's just going to be an hour either side, depending on your sleep. So at the moment, there's nothing exciting to look at here. Aussie dollar, US dollar is moving quite nicely, actually, saying that. Nice drop starting on that one. So looking for a target down in propulsion, but just waiting to bank stuff at the minute. Still a load of stuff flip-flopping around all over the place. Still quite a lot I can bank, but I'm just holding stuff at the moment, trying to get some decent moves in. So tomorrow is non-farm payroll day. So obviously 12:30 tomorrow afternoon, it all kicks off with the unemployment rate. So tomorrow's open is going to be quite tricky. I will be here for it, but might be a bit of a crap one. So we'll see. Yeah, Google FIFO if you want to know about it. Trading FIFO I would put in, because FIFO you might find, I don't know what you'll find. But yeah, just Google it. You'll find out more about first in, first out rules. That's it. So I will see you guys tomorrow. Have a good evening. Anything you need, I'll be in Telegram. Other than that, I will be back tomorrow as usual. So I will see you then. Have a good evening.